Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil slumping after U.S. President Donald Trump signals he may hold off on attacking Iran for now. German military personnel are set to arrive in Greenland today as European nations respond to U.S. threats. Denmark says a fundamental disagreement remains after meeting with U.S. officials. Plus, Mozambique will only start discuss renegotiating its debt after a deal is agreed with the IMF on a new program. Our exclusive with the president, Daniel Chapo, in about 20 minutes. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai, waking up to a slightly different tone in the region, I would say today, with news overnight that Trump, for the time being, is holding off from pursuing any military action in Iran. We're going to discuss that on the show, but it is crucial for market direction today. And you can see behind me, we're seeing Brent plunge this morning, down 3%. So some of the geopolitical premium is coming out there. Silver as well. Take a look there, down 6%, obviously after a massive climb towards the end of the year last year and in the first couple of weeks of this year. But what this does tell you is a lot of the safe havens, the geopolitical flight to quality that people have been piling into are coming off on the back of this news. So that's setting the tone there. As for equity markets, we'll take a look here. S&P futures still trading south of 7,000, down about 0.8%. We dipped a little bit yesterday in trade. Same for the NASDAQ. You can see down 0.2%. Actually, yesterday, NASDAQ saw its worst day in a month. A lot of the key names in the Magnificent Seven pulling back something like 2 to 3%. The likes of Alphabet, Amazon, Meta down 2.5% yesterday too. Plus, we had bank earnings as well. And even though, for the most part, Citi beat, Bank of America beat, what you did see was a pullback in banking stocks, too. So, again, be mindful of earnings season as we gear up and head into more and more earnings the next few weeks. Switching over, and I just want to show you our terminal chart today, which is coming in just a moment. And this is essentially telling you, in the past couple of weeks of the year, President Trump has been talking a lot more about housing affordability, about capping credit cards. And what this has meant, credit card rates, I should say, what this has meant is these stocks that did quite well last year, so the cyclicals, the banking stocks, have actually started to underperform, whereas consumer staples in the last couple of days have started to do quite well because Trump's affordability focus has started to dent that bank rally, but at the same time encourage consumer staples. I thought that was quite interesting, a chart that was put forward by our colleague Anthony Stevens in Hong Kong. All right, speaking of Hong Kong, let's check in on how markets in Asia are faring this morning as well. Winnie Su is in our Hong Kong studio. Winnie, what's on your radar?
Morning, Jomana. So we are seeing a bit of a pullback when it comes to the overall Asian market today after having risen for 3 straight sessions already. Here, the major drag is TSMC as we await for its earnings coming later today. For now, investors will be closely watching that spending plan for this year and also the outlook for the AI demand. And we're also closely watching what's going on in the currency space because we're seeing here the Japanese yen weakening just slightly, but pretty much flat-ish around the 158.6 level against the dollar, while the Korean won resumed its weakening trend. And it seems like the comments from Scott Bessent around the weakness and also the volatility of these two currencies are not really helping here. And neither is that hawkish comment from the Bank of Korea. After keeping the rates steady, that's also not helping too much with the currencies either. However, on the opposite of these weaknesses, we are seeing a bit of strengthening when it comes to the Chinese yuan. As you flip aboard and take a look at what's going on in the Chinese market, so a bit of a strengthening there, mainly due to the PBOC setting its strongest fixing since 2023. And in terms of other markets, cross-asset here, we're looking at the onshore benchmark extending further declines still amid the efforts from the regulators to cool the market rally. And when it comes to HS Tech, the biggest drag, though, is Trip.com here, extending further declines, now down more than 20%, with regulators continuing with that antitrust probe into the company. Back to you, Jumana.
Yeah, huge move in Trip.com there. Winnie Su in Hong Kong. Thank you. Well, crude oil fell for the first time in 6 days after President Donald Trump signaled the U.S. may hold off on attacking Iran for now. Trump says he has been reassured by sources that in the government that Tehran would stop killing people involved in protests. Speaking to Fox News, Iran's Foreign Minister Abbas Araghchi tried to downplay the unrest in his country, as well as the threats from the Trump administration.
The rhetorics are quite normal in any war. We have many kind of threats by President Trump, by other American officials, by Europeans who are talking about Iranian, things in Iran.
Joining me now is Dana Khresh, Bloomberg's UAE bureau chief. So as I started the show out in the morning, a very different environment this morning than where we were 24 hours ago when Trump actually put up a post saying help is on the way. Why do we think he backed down? What changed his mind in the last 24 hours?
So this is definitely what we're seeing is a shift in tone, right? After what you said, lock and loaded, after he's saying help is on the way, after urging protesters to keep up demonstrations because he would help them out. I think there are two things here. One, it is a very difficult decision simply because it's foreign direct intervention in regime change, and that the U.S. doesn't have a good track record of that given what happened in Iraq, and Iran is much bigger and much more complicated. And second of all, there is no guarantee that the regime would collapse after a strike or two on military or non-military strikes. I mean, let's look at the Iranian regime. It's entrenched. It's almost like a deep state. So there is no guarantee that a strike would collapse what is seen by many Iranian analysts as several layers of security apparatus. And they can immediately, and what we have seen is that they can fill these military positions really quickly. They have the people, and especially with guys like IRGC who have this loyalty to Iran, they probably are going to defend it as much as they can. And so now what we're seeing is kind of him saying, I'm not going to do it yet, or holding off for now. And he's saying that he's received from very trusted sources that the killings have stopped. And what we're seeing from Iran's human rights organization, that almost at least 3,400 people have been killed in these protests. So it's hard to know what the red line is. What's the threshold here, or the number of casualties that would prompt the U.S. to intervene to meet the demands of the protester, and that's toppling this very complicated regime.
Add to that, of course, the communication blackout as well, which isn't helping the situation. Yesterday, too, reports that U.S. military personnel were being moved out of the Al-Udeid base in Qatar, in Doha. What has been the reaction, and again, in the last day or so, from the region to the real possibility that the U.S. could get involved militarily in Iran?
Right. Publicly, the Gulf countries have been very quiet, except for Qatar saying that we're part of these communications, we're part of mediation efforts to de-escalate. But we know from our own reporting that there are several Gulf countries, Qatar, Saudi, and Oman, asking the U.S. to kind of take a step back or avoid a military strike. I mean, this is very close to home, right? Iran, destabilizing Iran is going to be very difficult for the Gulf countries to absorb. It's not like having, a strike on Al-Udeid and then like a theatrics, and then, you're done with the story. This is going to be, a long-term thing for them. One, they're scared of stability, right? Because this would be yet another conflict in the region that would destabilize this or slow down economic transformation plans that they have. They've poured billions of dollars into this, and any destabilizing factor would definitely pull back on, or force them to pull back on these plans. Foreign direct investments, all of these things that they've been doing to attract foreigners inward. You never know how capital gets scared really easily, so they might just, flee. And of course, very close to home, Iran, as it is now, maybe it's preferable for it to stay as it is. And we've seen how the Iranians crushed these protesters, maybe really quickly, to take the excuse away from Trump that, everything is calm and collected now.
Yeah. Dana, well, let's see how this all plays out. Thank you. Dana Khresh, Bloomberg's UAE bureau chief. Well, we were just talking about the fact that markets are responding, and what we've seen is a drop in the price of oil today, down more than 3.5%. Gold and silver, too, also dropping. But a rise in U.S. Treasuries has pushed the 30-year yield to the lowest level so far this year amid haven demand and bond supply considerations as well. So now we're going to talk fixed income with Al-Hussainy, fixed income portfolio manager at Columbia Threadneedle Investments, who joins us. Maybe let's just start with what I was saying about safe havens and where U.S. Treasuries sit in all of this, right? Because it feels as though people's instinct reaction now is not to buy the USD, not to buy U.S. Treasuries, but actually to buy gold and silver.
Yeah, it definitely looks that way if you look at market prices. This is what I would say. At the start of the year, Treasury yields, that income potential is still very, very attractive, particularly in the longer part of the Treasury curve. The behavior that we're seeing is particularly foreign investors are becoming a little bit more comfortable with hedging their dollar risk, but continue to hold that interest rate exposure in the U.S., particularly given how rich valuations are elsewhere in risk.
Okay, we'll get to that, the U.S. versus other markets. But before that, let's talk about the big change at the Fed, at the top of the Fed this year. And I'm not talking about what's happening with the Department of Justice. I'm talking about who you think will actually succeed the Fed chair, Jerome Powell. Because right now it seems as though the two Kevins, Kevin Hassett and Kevin Warsh, are the front runners. How would that influence the way you trade or monetary policy direction from here, you think?
It's extraordinarily difficult right now to get a sense of how the change of leadership at the top is going to reshape the board. In part, that job has become a little bit easier here at the start of the year. There's pretty broad consensus on the board right now that the Fed is comfortable pausing. That's going to create a little bit of tension with the White House, no doubt. We'll see that as soon as the January meeting. If you look further ahead, I think there's a real possibility that the Kevins don't make it into the top.
Interesting.
The tension between the White House and the Fed that surfaced at the moment, the pushback from the Senate in particular, I think has built a little bit of a buffer. I think the Senate is stepping in to protect Fed independence. And both Kevins, I think,
seem to be a bit too close to the White House.
A little bit too close.
So what, somebody like Rick Reeder comes in then?
I think Waller is a fantastic candidate. I mean, obviously, he's on the board at the moment.
Yeah.
He is a Trump appointee from the first term. And he has fantastic credibility in markets. And I think his stock in that horse race has gone up a little bit.
Okay, so horse race aside, we had CPI data come through, and it's actually been pretty benign. I've got to say, for all of the talk about the inflationary pressures that were going to emerge from tariffs, it hasn't really transpired that way. And if anything, the numbers have actually started to come in a little bit softer. Does that set the stage, do you think, for the Fed to be a lot more dovish than what's priced into the market now, which is 50 basis points this year?
I would say not yet. So part of the picture in terms of the data into the end of last year is unemployment went up a little bit faster than expected, and inflation came down a little bit faster than expected. What we don't know at the moment is to what extent was that polluted by the absence of data.
Yeah.
I think the Fed has signaled that they're quite comfortable waiting for new data to come in, waiting to get a better sense of direction before they act. And so that rapid decline in inflation, I think in November, December, we'll have a little bit more time to figure out if it's real. On the tariff front, it's true that the pass-through into the overall inflation picture is quite minimal. Into the goods sector, it's picked up a little bit.
Okay. Let's circle back to what you said at the beginning, which is that you see value in treasuries, presumably 10-year treasuries here. Okay, so where do you see its fair value for 10-year treasuries before I ask the next question?
Extraordinarily hard. Look, my best guess is treasuries were somewhere between, let's say, 4 and 4.5% the bulk of last year. I think there's a really decent chance that rating range shifts down to perhaps 3.5% to 4% this year.
Okay, what about the narrative around fiscal dominance, though, in the U.S., and not just in the U.S., but other countries around the world whose yields have been punished for overspending, like the UK, like France, like Japan?
Absolutely. And I think there's a little bit of a divergence now building in. The fiscal shock in the U.S. was a function of the election outcome back in 2024. We priced in a lot of premium, right? Yields rose into the end of 2024. The fiscal picture in the course of 2025 really hasn't materially changed. Our deficits are relatively stable heading into this year. They are deteriorating in Japan. They're deteriorating in Germany. and stable in the U.S. And I think that builds in a little bit of a divergent story in the long end of the Treasury curve.
So it's the delta as opposed to the absolute number.
Absolutely.
Really nice to chat to you. Thanks so much for coming on the show.
Thank you.
Ed Al-Hussainy, fixed income portfolio manager at Columbia Threadneedle Investments. Now for a look at some of the other stories we're following today. President Trump says he does not plan to fire Fed Chair Jerome Powell despite a Justice Department probe into the central bank's renovation. Trump stated that it is too early to say whether the probe would give him grounds to oust Powell. He also praised potential nominees to replace Powell, including Kevin Hassett and Kevin Warsh, and said he would be announcing something over the next couple of weeks. President Trump's pressure campaign to unify his party behind his takeover of Venezuela has succeeded. After all but 3 Senate Republicans voted to block a resolution opposing further military action in the country. Vice President J.D. Vance broke a tie vote in order to stop the resolution. Trump's success in flipping votes ends one of the most high-profile bids to check his executive power since he returned to office a year ago. And coming up, Denmark's foreign minister says a fundamental disagreement remains between his country and the U.S. over Greenland. The latest on President Trump's bid to take over the island, that's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. An exploration mission of 13 soldiers from Germany will arrive in Greenland later today as European nations work out how to ensure security in the region and respond to U.S. threats over the island. Meanwhile, Denmark plans to form a working group with the U.S. after high-level talks with the Trump administration.
We have decided to form a high-level working group to explore if we can find a common way forward. The group, in our view, should focus on how to address the American security concerns, while at the same time respecting the red lines of the Kingdom of Denmark.
Bloomberg's Copenhagen bureau chief, Sarah Solin, is with us for more. The last couple of days, the tone coming out of both Danish and Greenland leaders has been quite defiant. What is the sentiment there about the latest developments and Trump's comments vis-a-vis wanting to have more of a presence in Greenland?
There's been a lot of concern in Denmark and in Greenland, particularly over the last, let's say, 10 days, 2 weeks. In Greenland, there's been a real concern that he would go in, he could use military force and annex the island. And that's why this meeting was so important. It was seen as a way to diffuse some of these threats. So far, the debate has only been going on in media, on social media, and now the foreign ministers wanted to sit down, have some real diplomatic talks and figure out what was going on. There was a risk seen by
and at the same time...
Sorry, go ahead. Yeah.
No, apologies to cut you off. No, I was going to say at the same time, there seems to be some progress with respect to setting up this working group between the United States and Denmark. What do we know about that group?
Exactly. So they didn't really reach an agreement because they still fundamentally disagrees about taking over Greenland or not. But they're setting down a working group now where they'll meet within the next few weeks and figure out a way forward. Everyone agrees that the Arctic and Greenland needs more defense and security. So that seems to be the path forward.
Yep. And what do we think is next steps vis-a-vis broader European allies in the region? I mean, obviously, NATO are watching these steps very, very closely. There was an informal meeting as well regarding the topic. What has been the language coming through from other European leaders?
They've been very supportive. Already yesterday, when the meeting wrapped up, we saw Germany coming out saying they sent some military personnel for a drill exercise this week. France is supporting, the UK is sending an officer, same for Sweden and Norway. So there's definitely a sense that there's some backing from EU and NATO allies. There's just one NATO ally that the foreign minister pointed out that we haven't really heard from, and that's the US. So he feels like that's a big paradox, that we're talking about beefing up security in Greenland, and then the biggest ally has so far not done anything.
Yeah, okay. Well, we have to see how this story also plays out on Trump's geopolitical map at the time being. Okay, Sarah Solin, Copenhagen bureau chief, thank you so much for joining us. Now, President Trump says he sees Ukraine's leader, Volodymyr Zelensky, as the main obstacle to an agreement to end the war with Russia. Speaking to Reuters, Trump described Russian President Vladimir Putin as ready to make a deal. Meanwhile, the U.S. has prepared further sanctions should Trump decide to act on Russia's continued rejection of a peace deal. And coming up, Mozambique's president says the country will only start talks with creditors to renegotiate its debt after reaching an agreement on a new program with the IMF. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Mozambique's president says the country will only start talks with creditors to renegotiate its debt after reaching an agreement on a new program with the IMF. The gas-rich African country is in talks with the IMF on a new facility to stabilize the economy, curb its reliance on natural resources, and restore investor confidence.
What we want at this moment is to conclude the agreement with the IMF and then move on to the aspect you are mentioning, namely the renegotiation of the debt with international partners. We want to establish trust first. All of this will help ensure that Mozambique can position itself in the best possible way for its growth. But I reiterate that it is not enough to achieve the country's growth in technical terms. We really need this growth to be reflected in development, and this development has to do with the lives of the people.
Nigerian finance minister expects the central bank to cut interest rates soon if inflation continues to cool. He said lower inflation and borrowing costs would free up revenue currently spent on servicing debt and improve the fiscal balance. The central bank had more than doubled rates since 2022 before cutting them to 27% in September after inflation eased from late 2024 highs. Angola has agreed with JP Morgan to extend a $1 billion loan by 3 years and secure an additional $500 million in financing. The finance ministry says the new deal carries an interest rate of about 8%, lower than the original facility. The move comes as Angola looks to manage rising debt levels, which the IMF expects to climb above 63% of GDP this year. And a look at equity futures after the pullback for Wall Street yesterday. Not a great day for the S&P and also for NASDAQ, seeing it's the worst day in a month yesterday. Today, things are stabilizing somewhat. And of course, those comments from President Trump that he's backing down or holding off from striking Iran for now is being met constructively by the markets. European futures seen opening up 0.2% higher as well. Well, coming up, oil also falling for the first time in 6 days after Trump signaling that he's holding off from that attack. A look at how commodities are reacting next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil slumping after U.S. President Donald Trump signals he may hold off on attacking Iran for now. German military personnel are set to arrive in Greenland today as European nations respond to U.S. threats. Denmark says a fundamental disagreement remains after meeting with U.S. officials. And the U.S. announces the launch of the second phase of the peace plan in the Gaza Strip. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's get you up to speed on these markets. We saw a pullback for Wall Street yesterday, a day of red for both the S&P and NASDAQ. The worst day for the NASDAQ in over a month. It declined more than 1%. Those magnificent 7 names pulling back. Meta, Amazon down about 2.5%. And also keeping a close eye on bank earnings. We're going to recap them later on the show. But essentially, even though Citi and Bank of America put in better results than expectations, the result was a negative reaction in the market. It tells you that the bar is a lot higher for these banks to beat. They had a fantastic run in 2025. Today, though, things are stabilizing. Keeping a close eye, obviously, on the geopolitics in the region. Iran, Trump saying that he's backing off from striking Iran for now. So that's being met constructively by markets. And of course, a major pullback in Brent this morning, down 3.3%. Silver down 5.6% as well. So we're going to talk about commodities and the commodities reaction in just a moment. Very quickly, I just want to switch over and show you that, again, one of the big themes that has emerged this year, President Trump focusing on housing affordability, focusing on capping credit card rates. All of that has meant that banks have struggled, obviously, because the credit card cap would eat into their margins. But consumer staples have started to perform because that is a net good for consumers. Right. Speaking of earnings, though, I want to bring you some breaking earnings that are coming through right now. This is from TSMC, so a key one to watch in the chip maker space. The main figure coming through, the fourth quarter gross margin has come in at 62.3% versus estimates of 60.6%, so that is higher than expectations. Net income also for the fourth quarter coming in at 505.7 billion Taiwanese dollars. There's the estimates of $467 billion as well. So a beat on net income. Sales, this is according to Bloomberg calculations, have come in at 1.05 trillion. And then CapEx, also interesting figure. The market is watching for this very, very closely. 2025 CapEx totaled $40.9 billion. So that is the number for the full year. And just to recap, we do have the gross margin coming in higher than expectations, net income coming in higher than expectations as well. Let's speak to a lady who's been tracking these figures very, very closely. We're joined by our BTech Asia anchor, Annabelle Drewlers. I know there was going to be a lot of focus on the margin, on the sales figures, and obviously CapEx, waiting to see if there's any commentary also on the geopolitics. But your first reaction to the numbers that have come through now from TSMC?
Yeah, well, the numbers are really interesting. And I just want to give some context to where we are today, because we're actually just setting up. But behind us is all the people that have joined here today for that investor conference that's starting in about 30 minutes from now. But the numbers have just dropped. And to your point, there's some very interesting context really to share out of this. So first, as you said, we saw that revenue coming in, a 35% rise on the quarter. So very strong results. But really what was very interesting to track as well as the margin, because as you said, that margin has come in at 62.3%. That is higher than what the company had been guiding of 59 to 61%. And also it's way above what the company wants over the longer term, which is 53%. So it really speaks to that pricing power that the company has, and also just their capacity utilization, how much demand they have for their products. But essentially what else we saw, and as you said, that CapEx figure, very interesting for the year as well, because 40.9, so you're essentially coming in the midpoint. It was seen at $40 to $42 billion, and fourth quarter revenue is what we can see there, rising 11% from smartphones. So again, smartphones is interesting, just given you've got these jitters around memory chip crunch. Is that going to be impacting devices, but also the PC market into 2026? So just some of the headlines, but as you said, that net income coming in well above what analysts had been expecting, so 505.7 billion Taiwanese dollars for the period. The estimate had been for 467. So it just tells us, again, demand for TSMC products strong, and it looks to be strong going into this year too.
Yeah. And of course, there's going to be a press conference coming up shortly. What are you going to be watching out for in the presser?
I think the big focus for the press conference today is most definitely the CapEx that gets announced by the company, because pretty much every analyst that you talk to on the street is saying that we're expecting it to be higher than what it was for 2025. So 2025 it was $40.9 billion. By next year it could be around 48, but quite a wide range as well from what we hear from the street, somewhere between $45, $53 billion. So what we get there, but also what they say in terms of the US build out, because we have had some reporting at Bloomberg as well that as part of this deal that could be signed soon between Washington and Taipei, a trade accord, actually TSMC could be very heavily involved in this, because they could be pledging to add their capacity in Arizona. They've already got plans for 6 plants there, 2 advanced packaging facilities, but they could be looking to add a further 4. That's very significant in terms of CapEx when you think every single fab is worth around $20 billion to build. What sort of timeline are they looking to do that on? And exactly, again, the capacity, how are they going to be able to meet that demand in the market?
Yeah, well, essentially just another manifestation of the strong demand for anything AI and AI chip related at this point in time. Annabelle Drewlers in Taipei, thank you for breaking down the results for us. And Annabelle will be sitting down with TSMC's Senior Vice President and CFO, Wendell Huang. You can catch that interview tomorrow right here on Bloomberg Television. Let's switch over to commodities now. Crude oil fell for the first time in 6 days after Donald Trump signaled he may hold off on attacking Iran for now. Precious metals have also slipped from their record highs. Let's get more on this with Stephen Chasinski, who leads our Asia energy team. I guess, Stephen, now we know the answer to the question of how much geopolitical premium was priced into oil, because the pullback this morning indicates that, you probably had 3 to 4% of geopolitical premium. Is this it, though? Or is the market going to now move on to focus on fundamentals, or is there still going to be perhaps lingering concern in the background that this may arise again? We may be in a situation where Iran becomes a hot topic for energy markets again.
There is this interesting geopolitical risk, intangible asset sort of thing that's kind of coming through here, because not only do you have Iran, but you also have still Russia, because those peace talks are continuing, and that might any resolution there could deflate prices further. And then Venezuela, there are also if you can unlock more supply out of Venezuela in the short term, that can also push down prices. But you're right. I mean, I think the market's been really focused on what the Trump administration has been doing, but when you take a step back and just look at the macro situation, the market is in a fundamental oversupply. OPEC Plus, while they have paused their increases for this quarter, there is a view that, are they going to increase it again, increase supply later this year. U.S. shale output has remained quite resilient despite prices being in the high $50 range for WTI and low 60 for Brent. And so with all that together, and also you look at China, right? So the supply situation is looking pretty good. In Chinese demand, I think there are questions about whether or not China will really show up in the market and continue a lot of the stockpiling that they had done last year. The EV story is a big one in China. Their domestic oil output continues to increase more than I think what the market was expecting. So all that together kind of puts a more of a bearish sort of picture on the Chinese oil growth story and when it comes to imports. So will the market focus on fundamentals? I think it all depends on also Iran's situation at home. If there are more social media posts about protests, if there are more comments coming out of the government, I think that's something that could still swing prices and be something that will be on the top of minds for the traders.
Yeah, for the time being, I guess, just coming off with that geopolitical premium being priced out. Also, taking a look at metals, I know it's not your usual focus, but we are seeing quite a big reaction in gold, in silver, I guess other commodities that benefited from this safe haven status. Would you say the reaction today is just simply people taking off the trades because of what we found out from Iran overnight?
Yeah, I mean, certainly that is much more open to the geopolitical tension, right? You've seen every time the Trump administration does something, and they've been doing a lot this year, you see prices rise. Whether it's Venezuela, comments on Greenland, the comments on Iran, as well as just general tariff discussions, right? Trump also made comments overnight that maybe he won't put tariffs on rare earths that could affect potentially silver, and that was the reason why there was a lot of silver stockpiling to some degree in the United States. Maybe instead of doing that, he'll be doing some sort of bilateral deals to get critical minerals. All of that together, I think, really paints the picture. But really, the long-term view is one that I think you need to focus on, one that traders and investors are looking on for these precious metals, because it's not the day-to-day situation that's happening. It is what is the state of fiat currency? What is the state of the U.S. dollar? What is the state and independence of the U.S. Federal Reserve? And what is the state of the Trump administration? Are they going to add more, for lack of a better word, chaos into the geopolitical system? And if that is happening, what is the safest bet? Where are you going to fly to? And it does seem to be at the moment, it is gold, and to a greater extent, especially over the last few months, silver.
Yeah. Stephen, thank you so much for breaking it down for us. Stephen Chasinski, who leads our Asia energy team. Well, the situation in Iran still remains volatile, even after President Trump signaled he may hold off an attack for now. The growing protests continue to pose the biggest challenge to the Islamic Republic since its founding in 1979. Here is a look at how we got here.
Shopkeepers and merchants first took to the streets of Tehran in late December, angered by the worsening cost of living crisis and the sanctions-hit economy. Iran relies heavily on imported essentials, and a sharp currency slump has driven up prices as Western sanctions continue to squeeze the economy. 5 years of drought have made a dire situation even worse. Local food production has been hit hard, leaving the country even more dependent on the ever more expensive imports. At the same time, falling oil prices have deepened the crisis, with Brent crude trading at around $60 a barrel, far below the IMF's estimate of $165 needed for Iran to balance its budget. While the protests on the streets began about the economy, they spread into a broader protest movement calling for greater change. It comes at a delicate moment for the country's leaders, whose prestige suffered a severe blow after Israeli and U.S. strikes in June 2025 destroyed much of the country's nuclear infrastructure. And while the regime has faced mass protests before, it seems the Islamic Republic could be fighting for its survival.
The U.S. has announced the launch of the second phase of President Trump's peace plan in the Gaza Strip, which will involve moving from a ceasefire to demilitarization. In a joint statement, Qatar, Egypt and Turkey also announced the formation of a Palestinian technocratic committee to administer the Gaza Strip. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. So this was an announcement that we've been waiting for a couple of months now, phase 2 of this peace deal. What do we know about it? And what do we know about this so-called Board of Peace, Dan?
Good morning. Phase 2 is essentially the peacemaking phase, the end game of this very ambitious, very sweeping, very long-term Trump plan for shifting Gaza away from its decades of chaos and war to something like a Levantine Riviera. The announcement yesterday was largely overshadowed by the crisis in Iran, of course. It was expected by the various players. It was welcomed by stakeholders like Turkey, Qatar, Egypt, who've been mediating between the warring parties, Israel and Hamas. It was welcomed by Palestinian factions, including Hamas. The Israelis have been a bit more measured in their response, however. They're worried that this announcement might essentially paper over some very intractable problems still facing the plan. Chief among them is Hamas's refusal to disarm as demanded by the plan, and its failure to deliver the last of the around 250 hostages it took during the October 7th, 2023 attack, which sparked this war, a war that spilled over into many fronts. However, for now, at least on a declarative level, the plan is moving along more than 3 months after the ceasefire took hold in the Gaza Strip, a ceasefire that's been tested, that's been rocked by recurrent violence, but is still holding. So there is some optimism all around that this Middle East crisis, at least, may be on the road to resolution.
Bloomberg's Dan Williams in Jerusalem. Thank you so much for bringing us the latest. Well, coming up, NBA's push to expand its footprint in Africa is gaining momentum, with new talks underway to sell 12 new teams for its Basketball Africa League. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The NBA's push to expand its footprint in Africa is gaining momentum, with new talks underway to sell 12 new teams in its growing Basketball Africa League. Africa-focused investment firm Silverbacks Holdings says it's in discussions with the league as it looks at attracting local and international investors. For more, we're joined by Bloomberg's Lonnie Prinsloo. I've got to say, Lonnie, I'm enjoying talking about basketball for a change. What is NBA's plan in terms of setting up these franchises on the continent?
Yeah, thanks, Jumana. So the plan currently is just to sell franchise licenses to 12 teams. There is 12 teams currently playing within the BAL, or the Basketball Africa League, but the franchise licensing will then make it permanent teams that play. Plus, you also get the opportunity as an investor to build infrastructure around these teams, such as home arenas and home courts.
And what exactly is the process from here? I mean, how much could these franchises actually be worth?
Yeah, so as we said, they started talking to investors. We have Silverbacks interested. Apparently, there's quite a bit of interest. Africa, of course, is able, and we have seen previously, to deliver great athletes. Plus, in terms of value, there's 12 teams in different African countries with different macroeconomics. So early indications, it's difficult to establish, but early indications is that you can, the NBA could generate about $500 million from selling these franchises. So yeah, we're looking forward to the process and seeing who all is interested.
Yeah. And which of the countries you think that would be most subscribed to bringing on the NBA Basketball League and the various franchises into their countries? Where is basketball very popular in the continent?
Yeah. So, of course, basketball at the moment is not as popular as soccer, but what we are seeing is Silverbacks, for instance, already owns a minority stake in a team in South Africa called the Cape Town Tigers that's doing really well. So South Africa has quite a few teams that are doing well, and then North Africa also really interesting. They have in Morocco, we're seeing some teams from Egypt, and even West Africa, we're seeing quite strong teams there.
Bloomberg's Alani Prinsloo in Johannesburg. Thank you so much. Let's see what happens with that story. All right, coming up, America's biggest banks are posting bumper earnings, but investors are questioning the sector's long rally as the White House strikes a tougher tone on financials. We'll discuss that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. America's biggest banks are posting bumper earnings for the fourth quarter, but investors are questioning the lender's long market rally given a shift in tone on financials from the White House. Citigroup weighed in on the Trump administration plan on credit card interest rates, saying the lender wants to cooperate but does not support the proposed cap. For more, Bloomberg's Charlie Wells joins us from London. You know, Charlie, I was looking at all of the earnings that dropped yesterday, and I was a bit surprised at the price action with all of these stocks down anything from 3 to 4% in trading. Wells Fargo a miss, so you can understand that, but Citi and Bank of America beat. So why is this translating to such a negative price action?
Yeah, Jumana, it just wasn't supposed to be like this, particularly given some of the numbers that we did see that you were mentioning. I mean, 84% growth in the quarter at Citi and Financial Advisory. That is eye-popping. You think about Bank of America, their equities traders had their best fourth quarter ever. You think about Wells Fargo, even broader to the health of the consumer, net charge-offs were down significantly there. And I think what this is telling us is there had been a lot of optimism about this banking rally, but we're getting this shift in tone, as you mentioned, from the White House, and that is sending some jitters through the market. There was also on a lot of these analyst calls more of a focus on expenses, which makes us think that analysts and investors are concerned about costs. We heard about those previously from JP Morgan. We heard yesterday Citi declining to give an exact estimate for costs. Analysts talking about costs at Bank of America potentially being worse. So a shift in tone here.
Okay, but we also have two other major ones reporting today, Goldman Sachs and Morgan Stanley. Could they perhaps change the narrative somewhat because those banks are less exposed to all of the conversation around credit card caps?
There's a world where that could happen. I mean, it's a little late in earnings season, but that could happen, especially given the strength that we're expected to see, particularly on the investment banking front. Fees should be really strong there. And we actually had some surprise dips at some of the other banks. So if Goldman and Morgan Stanley are able to outperform on that front, that could be strong. And what we've also seen over the course of the week is strength, particularly in equities trading. And this is where a lot of these two banks have, strong teams. But I think there are questions about this banking rally. We are, as I mentioned, late in this earnings season. You look at that KBW bank index, it's inching toward performance of the broader market. So I think this earnings season, as we come to a close, really just has not gone as a lot of people thought. And I think this has to do with that changing sentiment coming from policies in Washington.
Yeah. Let's just maybe take a look back. And one of the charts that I was showing at the top of the show is the fact that the change in tone, there has been a notable change in tone from the Trump administration with a real focus on housing affordability, on consumer costs. 2025 was a great year for the U.S. banking sector. You've got to wonder, perhaps, maybe there's some concern, and have we heard it from the CEOs into 2026 about the political narrative, because this is a major year in the U.S. and because we have the midterm elections coming up in November. This is going to be a focus for Trump.
Yeah, Jumana, there's been a dichotomy here. So you hear these executives starting to weigh in on some of these policies. Jane Fraser talking about how she can't support this credit card cap. You heard Jamie Dimon talking about the independence, the importance of the independence of the U.S. central bank. But at the same time, they are seeing a healthy consumer. I just talked about how, Wells Fargo saw a decline in net charge-offs. They're seeing strong spending. They're seeing strong deposits. Their loan growth is opening. So this is that dichotomy that we have seen in the economy. It may have to do with that K-shaped economy we've been talking about for so long, but consumers on average are doing well, but there has been vulnerability for the Trump administration on affordability. So we're seeing something of a disconnect there, noise out of Washington, but strength in the consumer, at least on average, coming from these bank numbers.
Yeah, Charlie, thank you so much for breaking it down for us. All right, I guess we'll recap it all with you tomorrow once we get Morgan Stanley and Goldman Sachs later today. Thanks for that. Okay, let's switch over and take a look at equity markets because, as Charlie was just saying, one of the main underperforming parts of the market yesterday was financials with the pullback in the stocks that did report their earnings yesterday. Today, things are stabilizing. S&P futures just shy of 7,000 here, but basically trading flat. NASDAQ too. We also saw a pullback for tech stocks yesterday. It was the worst day for the NASDAQ in over a month. But switching over, I do just want to point out the fact that this morning we are seeing geopolitical premium come out massively in all the safe havens. Take a look at silver. We're back to $88 an ounce, down 5.4%. Brent also tumbling today, down 3.2%, as Trump says he's holding off striking Iran for now. That's it for our show. I'm Joanna Bersetchi in Dubai. Stay with us for Daybreak Europe.